Hello all, welcome to today's afternoon session for WealthE Wednesday. Pleasure to have everyone here with us today. Please feel free to introduce yourself in the chat box below should you have any questions. Would love to hear where you are from. Excellent. Welcome, Eugene. Ralph, I hope that you can hear me now. Let's see. Wonderful.
To get started in just 1 minute, I just want to allow everyone who is in the waiting room to log in and connect to audio. Hi, Jacqueline from Portugal, Kiwi from London, Michael from Durban. Wonderful to see such a diverse audience with us this afternoon, regardless of where we all may be in the world. I personally am sitting in Cape Town in Muizenberg. Jay Miller from North Florida, welcome, and thank you for waking up so early to attend this afternoon session here in South Africa. All right, let's get started, shall we? So just as an introduction to who you'll be interacting with or who you may already be in contact with within our team, you have our CEO, Scott Picken, myself, Gabriella, as head of revenue, our two wealth consultants, Alex Westhazen and Fritz Greuss, and our client relations team and KYC specialists, Siska Damaskinos and Ruth Coates. It's very likely that you have been in touch with at least one, if not a few of us already. If you are currently verifying your profile with us or have already invested with us. But should you have any questions on any of the information presented in today's session, please feel free to reach out to any of the individuals shown here on screen. We are here to serve you and ensure that your onboarding experience with us is smooth and that your investment experience with us is smooth as well. So just so we are all aware of what we're discussing today, this is for the Wealth Migrate platform, an opportunity for you to create a profile very quickly to be able to access quality global partners or sponsors and premium investment offerings. You can invest from as little as $1,000, though for today's WealthE Wednesday, we have dropped all current deals on our platform to $97 US. And we make the process of investing in these offshore assets as hassle-free as we can so that you do not have to take on the complexities of setting up your own foreign bank accounts, tax structures, or jumping through legal and compliance hoops in order to ensure that you're receiving institutional quality returns in commercial real estate assets. So we really do try to make this as easy as possible for you to create true global wealth with our online wallet system and ease of investment into our current offerings. As a reminder, a quick and easy way to get started is to simply sign up on our marketplace. Go to wealthmigrate.com, click on the blue sign up button in the top right-hand corner, complete your profile, fund your online wallet, and invest. And I'm also happy to take us through a demo after my presentation today if anybody has questions about that sign up and profile completion process. Now, I do want to touch on our investment and return cycles of a deal because we have heard from some of our investors recently just questions about the investment process and when they can start expecting returns in some of the deals that they have invested in. So as a reminder, the way that we source our deals is actually through engaging with our current sponsors. A sponsor may present us with an offering that they are, an opportunity that they are offering to their investor network. We will then do initial due diligence on that offering, doing an extensive market and deal dynamics analysis, testing the reasonability of the figures presented in the business plan by the sponsor, and our Chief Investments Officer, Rian van de Pfeiffer, will then conduct a sponsor interview, really interrogating the finer details of any of the deal in question with that sponsor directly. Then a final due diligence report is created and reviewed that includes a synopsis of all deal fundamentals, both positives and risks associated with the deal, and the rationale for why this would be a deal that we believe is a quality deal to put onto our marketplace. The investment committee then presents our deals team then presents a recommendation to our investment committee, who then makes the decision on a deal. At the time that a deal is approved to be featured on our marketplace, we will ensure the capacity for the deal. So essentially, how much money do we need to raise for the sponsor for this deal, as well as the period of time that we would have to raise capital. Some sponsors request that we raise capital within a week. Others provide us a bit longer to raise capital within our community. This is where you will see the deal on your end. When we open a deal for funding onto our marketplace, during that raise period, and again, this could be as short as a week, could be as long as 6 weeks, we are actively raising funds from you, our investors. This is where we will ask you to fund your wallet and submit your IOI, or intention of investment. You can cancel your IOI at any point during this period while the deal is open for funding on our platform. And I apologize here, it seems my slides are a little, there we go. Then we close a deal for funding on our marketplace. At this point in time, we aggregate all of your investments into our special purpose vehicle and send those funds directly to the sponsor. It's only at this point that we confirm with the sponsor when that first distribution date for returns may be. We have a general idea that we will receive returns dependent upon the deal, of when we will receive terms dependent upon the deal, but we do not confirm that distribution date until we have actually sent those funds to the sponsor. Once the fund is closed and those funds have been sent to the sponsor, of course, the sponsor then manages the deal for the lifetime of that deal, following the business plan as provided. On the Wealth Migrate side, we do deal tracking and monitoring. We follow up with the sponsor on deal reporting and ensure that returns are distributed quarterly and annually, or annually, dependent upon the deal, to our investors. At the time that a deal exits, we then also ensure that the sponsor is following that exit strategy and execution per the business plan that they provided, and capital returns are distributed to us into our SPV, and we then distribute those directly to the investors. So let's talk about some of our current deals and some of our newer sponsors on the marketplace today. We are proud to have a new sponsor in Clear Capital Partners. Clear Capital is a private equity real estate investment firm with a 25+ year track record of creating significant value for their investors. They specialize in multifamily real estate, and since their original inception in 1996, Clear Capital's founding principals, which have a combined of over 100 years of real estate experience, have applied a distinctive approach to investing across the United States Sun Belt markets. Specific markets that Clear Capital Partners has found success in include Los Angeles and the Inland Empire of California, as well as more recently Texas and the Dallas-Fort Worth area, Denver, Colorado, and Colorado Springs area, Utah, specifically the Salt Lake City metropolitan region, as well as Phoenix, Arizona. They have control over 800 million in multifamily real estate investments, with a unit count of over 4,300 units that have consistently produced strong average returns in the mid to upper teens. Alongside the investors for Clear Capital, they are seeing a typical 5 to 10% equity stake in the capital raise. Clear Capital is providing a 5 to 10% equity stake in the capital raises that they are conducting, and they have been fortunate to have never lost any capital in their history of investing. So this is quite a tried and true sponsor for us. We do consider them an established sponsor based on our sponsor categories. And we are proud to have Landing Point under Salt Lake City open for funding on our marketplace today. You'll see and note that the minimum investment has been dropped to $97 today. That minimum investment will stand through Friday, the 9th of July. We have extended the closing date for this investment per the request of the sponsor. Landing Point is a low-density multifamily property located in Salt Lake City, Utah. There are 126 apartments across 9 buildings within this asset, with a strong current occupancy rate of 97.62%, so nearly 98% occupancy rate. The unit or the asset itself is believed to be a desirable mix of units, with a majority of those units, over 80%, being 2-bedroom units and 12% being 1-bedroom units. Now, we feel that this investment, this is a good case for investment based on the strong economic fundamentals associated both with multifamily as a real estate subsector in the United States, along with other supporting factors such as supply constraints, current job growth, and proximity to education, entertainment, health, and economic hubs in the Salt Lake City area. Overall, this is a deal that we believe will produce quite strong returns. As you can see, 13.09% investment IRR and a 5.33% cash on cash for our investor community, and that is after fees. And I see I have 2 questions here, so let me just open that up. Oh, I'm not actually able to see those questions, unfortunately. I'll come to your questions at the very end when I can stop sharing my screen, and we'll address those. Now, we also have an opportunity on our marketplace with Feldman Equities. Feldman is not a new sponsor to the Wealth Migrate platform. We did offer an asset opportunity to our investors in December of last year. But Feldman is considered our most tenured sponsor on the platform at the moment. They have been operating for over 100 years, so they are a family-run and successfully run organization and operation. They they own or manage over 4 million square feet of Florida office space, and they have, for the past 30 years, developed and acquired over 11 million square feet of office and retail properties with an aggregate value in excess of $3 billion. So they are absolutely experts in the office niche. Now, you may be asking, why do we have an office asset on our marketplace at the moment in the form of Pinnacle Corporate Park in Fort Lauderdale, Florida? And the answer is actually because of the sponsor in part. The sponsor themselves, again, have been in existence operating for over 100 years, have survived more than 7 economic downturns successfully, and really are quite skilled at identifying and seeing returns on office assets. Now, this office in particular is considered a Class A property with Grade A tenants. And I'll explain what that means. But overall, the property itself has been resilient to date through COVID-19 and has maintained 100% collections in their rent roll from their current tenants. The property itself is currently 83% occupied, which does allow that sponsor to significantly increase their net operating income through the lease up of current vacancy and marketing current rents to the market. Overall, the business plan for this deal is to renovate approximately $2.7 million worth of investment into the building, and this will include the installation of a new high-end fitness center, a business and conference center, and a tenant lounge play zone. These renovations will also include a new lobby, common area upgrades, elevator cabs, and shaded park construction. Overall, some investment factors to consider. This opportunity does present investors an option to enjoy strong and diversified existing cash flow while creating significant value by renovating the property and pushing rents to market. What we have seen is that over the past 24 months, ownership has completed 17 leases with tenants in this particular building, with a total of 91,000 square feet tenanted. This has bolstered its strong rent roll and features 4-year average lease terms amongst those tenants. So these are tenants that are considered sticky, if you will. They are going to be around for quite some time, certainly for a majority of the length of the term of this deal. As mentioned, this is a Class A property. It is a property that is located in an upmarket area of Fort Lauderdale, Florida, that may permit future apartment construction near the building, which will only further increase the need and demand for local office space. It is 83% occupied with investors offering, it is 83% occupied with grade A tenants. Those tenants are in the realm of law firms, financial firms, and tech firms. So also a very diversified rent roll in terms of industry of tenants in this particular asset class. Now, where this particular office space is located is quite significant to why we believe it is a great opportunity to invest in. It is along a main artery in Florida, just between Miami and Palm Beach. It's an area of the submarket that has showed strength through 2020. In fact, rental rates have continued to rise despite some slippage in occupancy in other assets around the area in 2020. We also have seen ownership increase in traditional downtown tenants like law firms and financial services, which has actually increased the cost of rent in those downtown areas. And it's why individual offices and tenants are now looking to move to this upmarket area in the form of Pinnacle Corporate Park, the Cypress Creek area, as shown and highlighted here. Now, just a reminder on our fees for these deals. These are fees that match our mission. We are incredibly transparent in the fees that we show to you. So if you are interested in investing in these deals, keep in mind that you will be charged a 3% upfront investment fee. This is to ensure that we can cover the costs of delivering the platform to you, of the services involved in structuring the actual investment of funds to the sponsor, as well as our marketing and investor acquisition costs. Once you receive returns from any deal, we will also take 10% of whatever returns that you receive against this deal. And with that, I will happily take questions now. I'm just going to go off screen, stop sharing my screen so I can actually see these deals. So I have a question here on what multifamily real estate means. Is it timeshare? What does that understand? So as the name implies, multifamily as an asset class is a single family property or building with only one available unit to rent. Single family properties are buildings with only one available unit to rent, and multifamily buildings are buildings with more than one rental space or rentable space. So while traditional residential condos or condominiums might have separate titles or deeds for each unit, multifamily is effectively an entire block of residential apartments that are held under one title deed. So any duplex, apartment building, townhouse, or condo complex that houses separate families classifies as a multifamily real estate. We are very bullish on multifamily in the United States, and specifically in the Midwest United States, Salt Lake City, Utah being a part of that region. And that is because multifamily tends to offer reliable passive income streams with very predictable cash flows generated from monthly rent rolls. It is also the largest commercial asset class in the world. And since affordable accommodation is a basic human need and everyone needs a place to live, we're seeing that asset class continue to grow, specifically in burgeoning metropolitan areas like Salt Lake City, Utah. So I hope that answers that question sufficiently. I do want to note that for the landing point apartment complex that is an offering currently on our marketplace, that is for tenants. That is not an opportunity that is going to be, or it is not a multifamily asset that will be used for timeshares or vacation rentals. This is for long-term residents to rent, and that's again on this conscious decision made by the sponsor so that they can ensure consistent payment on rent roll. And then we have a question here from Jay on if can deals in earlier stages be sponsored or participated in by vetted investor members? So that's a great question, Jay. We do offer some of our members, if you are planning to invest or deploy a large amount of capital in the form of over 100,000 US dollars, we will give you early access to be able to see the pipeline of sponsors and deals that we are interacting with and the upcoming deals that we will be putting onto the marketplace. We also, if you are deploying more than $100,000 in capital into a single deal, we'll offer you the opportunity to be a part of a private seminar with the sponsor to ask them questions directly with us. Jerry, Pinnacle is actually not closed on the marketplace. Unfortunately, the slide that I used here was out of date, but we have extended Pinnacle Park to be invested into until Friday, the 9th of January at 97 US dollars. And Michael, excellent question on who our investment committee is. Let me just share my screen again with everyone. And I can discuss that in a bit more detail. So our investment committee is made up of our Chief Investments Officer, Rianne Santa Pfeiffer, our Head of Global Products, Lyndon Booth, and our CEO, Scott Picken. They are the individuals that are reviewing and assessing the due diligence reports that are put together by our deal operations team. That team is consistent of Carlise Grayling as our deal analyst, Jing Chai as our sponsor researcher, and Lee Rush as our sponsor community relations. Not featured here is also Dean Anticevich, who is located in the United Kingdom and supports both Jing and Carlise on sponsor research and deal analysis. And with that, I'm not sure if there are any additional questions from anyone for today's session. But if you have any questions or interest in any of the deals, please feel free to contact us directly or get in touch with a member of our investment team. Thank you so much, everyone, for your time this afternoon. Take care.